Okay, here we are. So effectively, everything went on pause across the entire industry during our COVID hiatus, but what that's really allowed us to do is have a bit of a reset and decide what we want to be doing, not just for aircraft and travel, as Andy has touched on earlier, but looking really at airports and how we develop them. So what we're going to cover today very quickly, and I'd like to really just give you a highlight in terms of the private sector participation in airports historically, what these ownership profiles have looked like in the operating model, some of which we've seen here in the Middle East. Airport pricing comparables, mostly before pandemic, because there hasn't been a lot of transactions during the pandemic. Some of those key investment drivers for the industry, the travel or the traffic growth and the resilience that we've seen historically, and some of what Andy touched on earlier, we also see coming in this post-pandemic environment. And then some of the operating cost dynamics of airports and some of those things to keep in mind. And we'll touch very briefly on a few business cases or case studies from some of the airports across the globe that have done the steps towards privatization or at least PPPs. And then finally, some key takeaways. Privately operated are in fact concentrated in Europe, which is not a big surprise. The next most popular sort of approach to this is actually in Latin America, where a large percentage, almost 50% of those airports are in some sort of private sector involvement. And then finally, you look at a lesser uptake, but starting to see much more activity in that area is the Southeast Asia, then into the Middle East. And somewhat embarrassingly from where I come from in North America, only 1% of airports in North America are in fact having some sort of private sector involvement. So what that really means is that there's a huge amount of opportunity in North America and Canada and the US, but unfortunately that is going to take a little bit longer due to just sort of the political constraints that are impacting the ability to see private sector participation in airports. Some of the exceptions we're seeing are in places like New York, where they're seeing the airports being developed in JFK and Newark and other locations in the greater New York area through a private sector PPP model. So what that's allowed both in North America and Latin America particularly is that growth in the private sector. So as we're seeing in Europe, roughly 75% of all airports have some sort of private sector participation, followed by the Latin American region at roughly 66%. We then move on to 48% or 47% in the Southeast Asian region, followed by the Middle East at roughly 18%. Africa, somewhat surprisingly, at 11%. That's starting to grow, but that's been quite quiet. But again, sadly, as I talked about earlier, the meager 1% in North America. And that is Canada and the US, considering that Mexico is in North America, but it's really part of the Latin American region, at least from aviation perspective. So a long ways to go, but opportunity nonetheless. Worldwide, that represents about 43% of the overall airports that have some sort of private sector involvement, and that's by passenger volume. The models are varied, and as you can see here, they vary from government departments or agencies, and you've got a few examples there in LA and with Japan. You've also got government-owned companies, and we're familiar with a number of examples, including Infraero out of Brazil. You've got Tocumen in Panama. You've got many in the region here as well. One of the more unique approaches, I guess, is in Canada. We invented this not-for-profit model about 25 years ago. I don't know of any other country that's really replicated it, so it's a bit of a one-off, but it's non-share capital. So it's not privatized, but it's not government either. It's somewhere in between. You then have management contracts, which is more of a tentative step into the sort of private sector involvement, but it's really around managing the airport, not really investing. We then have the examples of joint listed stock companies, and we've got many examples of that, like ADP, Malaysia Airports, and others. Then you get into joint ventures, and again, that's often between governments and private sector investors. You've got your private concessions, like the ones we've seen in the Philippines and in Kansai or in other Japanese airports and others around the world. And then you've got the full privatization like we see in places like Heathrow, Brussels, etc., where they actually have freehold title to the airport. So again, there are many models. The private sector ones are the ones that are skewed to the left in this chart. But really, there is no best model, and it really depends on the situation for each government, each airport, and their situation. It comes down to their DNA and what they're really aiming to accomplish. It's around risk and reward and that trade-off, control and delegation of the authority over that airport, and ultimately the political accountabilities. And when it is coming down to that decision-making process, you're really talking about that level of control that is going to be delegated or retained by the government versus the transfer of risk and that accountability. So this chart, again, a little bit hard to see the detail, but the important part is that there's been a sort of consistent, sort of return on airport investment that is averaged around 16 multiple on EBITDA, and that's pre-pandemic. Again, there's not a lot of data points post-pandemic at this point or during the pandemic, but there's been a few outliers, and some of these have been trophy assets like London City, traded a few years ago at a 30 multiple, which everybody was very surprised, didn't likely expect to see it repeat, although it did repeat in Brazil for two of the airports, which was a little bit prior to their sort of economic crisis and political crisis, but that really was what I would characterize as a feeding frenzy. But we've seen a moderating of that sort of demand or that frenzy prior to the pandemic, and it will be certainly much more muted as we get into the recovery. A few other data points here. You see back in 2016, there were sort of a steady rise in this ratio of multiples, growing particularly in Western Europe, where you've got most of the traded assets flowing within the market. But then, as we said, the pandemic hit, so we'll be yet to see any sort of significant transactions within the pandemic, and we'll see what happens in the coming months and years. But that's more or less what you can see here over the last 10 to 15 years. Some of those airports that have traded within those groups are listed here. Sydney is a recently sold one that has not showed up in this new data, but that is probably one of the only significant transactions within the representative group here over the last 24 months. But what you can see is that multiple ratio is in and around 16, and it ranges anywhere from 8 to 36, depending on the airport and the circumstances. Some of the examples that we've seen over the last several decades, actually, there's been a number of different reasons for airports to go private sector investment, and really the trailblazer initially was British Airports Authority. It was a political philosophy brought on by the Thatcher government back in the day. Then it went through another phase where the monopoly breakup happened between BAA and Ferrovial. Then you've got infrastructure development, which was really the driver for the airports in Latin America, primarily in the 90s and the 2000s. Then it really, there was a lot of other sort of drivers there in terms of monetizing assets to use for other use, and the French regionals and Brazil have been using that approach. I think you're going to be seeing more of that going forward here as governments try to recover from the pandemic and, frankly, to monetize the cash that they had to spend recovering from and responding to the impacts of the pandemic. There are other reasons, and they also include things such as increasing traffic and developing business, and you've seen this in other jurisdictions where they've been trying to grow traffic in a more marginal airport, places like Westchester, New York, or in Lithuania. The desire to grow from 1 million or 2 million, maybe even a 5 million passenger airport to something more dramatic. And then you have asset allocation or reallocation and return on that asset. You've seen that in London City. You saw that a few years ago in Gatwick as well. But it comes down to asset recycling and asset and cash being able to be freed up by governments in particular to use for other purposes. So again, talking very quickly about some of these key drivers, the private sector catalysts can be characterized by a number of different areas, but the most important ones really are about the future growth prospects, and they often outpace the need for capital. And I guess we were in a reduced demand capacity over the last few years, but we're very quickly going to see a capacity constraint in a number of airports as the traffic comes back. But I think we're going to see a different behavior as well, and that will drive the interest for privatization or PPPs in different directions, probably more point-to-point traffic versus the hub and spoke. We think that Europe will remain one of the regions with the highest percentage of passenger growth and focus on private sector investment, but we will see more growth in the other regions that I summarized earlier. I'd like to change gears a little bit and give a little bit of a perspective on the growth in passengers and the resilience, and we're all considering what will happen post-pandemic, and we always had these nice predictable sort of recoveries in traffic that happened after major black swan events, but in this case we've never seen an event quite like this. But up until the pandemic, this was the traffic growth and resilience by country, and this is a vast amount of data here, but two countries stand out. And I guess the first one, you probably don't have to be much of an expert to figure out that it's the US is the highest travel propensity country in the world, and the traffic growth is showing that correspondingly. But what you're seeing is a very strong uptick from China, and that we expect to continue post-pandemic. There's a bit of a curiosity in this chart that I just wanted to point out as well, but if you see on the left-hand side in that light blue, there's a country that was number 3. This was roughly 25 years ago, and that was, I guess 30 years ago now, that was the USSR. So with the current politics and other things that are going on in the region, very curious to see where the USSR stood 30 years ago. Very quickly, looking at a few of the other countries that have had contributions to the global passenger traffic, you can see this distribution between, again, China, the US, but a growing importance in India, and you can see that of all the top 10 fastest growing airports in the world, virtually all of them are in Asia, and so that was the case before pandemic, and we do expect that to be the case post-pandemic as well. I want to take a little time to talk about the operating cost dynamics, and it's a bit counterintuitive, but the actual sweet spot for operations of an airport on a cost per passenger basis are somewhere between 4 and 5 million passengers. That as you get to 5 million, you're really hitting that sort of optimal cost per passenger basis. But then it starts to become more costly because you end up with multiple terminals. Sometimes you end up with mass people movers between terminals. Your security becomes more complicated, and in fact it becomes more costly on a per passenger basis. But this is some of what will also be affecting the way PPPs and privatizations are actually structured going forward. And that trend prior to pandemic towards monumental terminals as you got into bigger and bigger airports, we expect to see that being moderated somewhat, because the cost and even the environmental impact of large monumental terminals always impacts on the bottom line, not just for the airport, but for the airline and the passengers. So we hope to see at least less of a focus on monumental buildings and much more of a focus on practical, modular, and expandable terminals that can be flexed over time, but not to be overbuilt to start with. So that brings us to a few case studies, and as we lost a little bit of time with the technical issues, I'll just do a few quick highlights here. Just to say that, you know, that case study of Heathrow was quite interesting, and as you saw earlier, it went through a few different evolutions to get to its current state. It's now owned 25% by Ferrovial Airports, and obviously that evolution has come through a breakup of the monopoly of BAA, and you can see that those operators, including Ferrovial, are spreading their wings to other places, including most recently in Ferrovial's case, taking a majority interest in Dalaman in Turkey, and there's other interests at play with Ferrovial as well, taking on potentially a role at JFK Terminal 1. So when you look at these international airport operators, we are tracking roughly 33 airport operators that operate more than one airport in more than one country. And Ferrovial is only one of that group of 33. But none of those 33 have exited the business of airport operations and global development during the pandemic, and I think that's the interesting part. Will there be a few casualties along the way, or certain government-influenced operators have the interest of perhaps exiting the international market? That's a possibility. Malaysia Airports may, in fact, be one of those. Its most significant sort of international operation outside of Malaysia is in Istanbul at Sabiha Gökçen. That remains to be seen whether they remain to hold their position there. But again, this is a government-owned company, traded publicly, but controlled by a government entity. But again, part of that spectrum that we talked about earlier. Some of the good success stories we've seen over the last 10 to 15 years, the Mexican bundling of 3 different groups of airports has been very successful, roughly 8 to 10, up to 12 airports per bundle. Each one of those 3 operators has been quite successful in a range of airports, from larger hub airports that might be between 10 and 15 million, down to very small regional airports that are under 1 million passengers. But that bundling effect has given them the best of both worlds. But they did it in a very deliberate and strategic way in terms of bundling them regionally, but bundling them by size so that the larger airports can support the smaller ones. Doesn't always work in smaller countries that only have a handful of airports, but in Mexico it's worked quite well. And finally, the key takeaways. Private sector participation in airports is on the rise globally. It was prior to the pandemic, and we expect it to continue into the recovery period. There's a broad range of models that have been tried and tested, as you saw earlier, but every one of these airports is unique, and governments are having to figure out the best model to fit their circumstances. And it may be going through an evolution, starting with a management agreement and then going into some sort of a P3 or some sort of structured partnership. And then investment needs often exceed capital available. And this is where having a practical appetite for what can be built and should be built in the short term is important, and size matters. And when I say size matters, sometimes being smaller and flexible and being able to adapt to market growth and changes in the environment is far more important than building a massive piece of infrastructure and hoping that you grow into it. So size matters, but sometimes bigger is not necessarily better. And finally, there's really a trade-off between control, transfer of risk, and accountability. And for any government that's thinking about privatizing its airport or getting into a P3 or some sort of structured private sector involvement, it always comes at the cost of being able to help stimulate the development of that airport, both infrastructure and passenger growth-wise, but it means also giving up some control over day-to-day operations, being strategic, and realizing that it's a partnership at the end of the day. So that really rounds out my comments, and I'm not sure if there was any thought of questions and answers, Federico, but happy to answer any questions if there are any. And if there aren't, you know where to find me. I'll be here for the next couple of days. Thank you.